Hello, everybody. Welcome to the webinar for Milestone 3, Microeconomics Echo 201. I'm going to go over the requirements of Milestone 3, and then we're going to leave 10 minutes at the end so that you can ask any questions you have. I'm not able to read the questions and go over the milestone at the same time. It requires too much multitasking. My name is Kiara Yates. I'm not Nicole Soto, but that's who the account is registered with. And I am an instructor of Echo 201, Echo 202. I've been working at Southern New Hampshire since 2012. I'm going to start opening up the document. We need to, that's not what I want to, open the document and share this, I think is what I wanted. Exactly. So tonight, for Milestone 3, you're going to go over some of other research, other aspects of your firm. And then in the end, you're going to provide recommendations. So you're kind of going to wrap up all the research you've done through these weeks and come to a conclusion. There's several items you're going to have to develop through Milestone 3. I think Milestone 3 is the longest and maybe even a little bit more challenging because it requires you to really read the income statements of your firm to find out more about their product and how much it costs to produce their product or services. One of the first elements you're going to go over is the costs of production. You're going to analyze the various costs of productions that the company faces, and you want to provide trends over time. When we talk of trends over time, we're talking of a 5-year period to establish a trend. So you did trends for demand and supply over 5 years. Now here you're going to do costs of production trends over a time of 5 years. You want to analyze the costs of production because we want to find out how the costs to produce the goods and the services impacts the profitability of your firm, and ultimately how it will also impact the output decision, how much they're going to produce. Yes, Candace, accounting is very useful to understand all the terminology and read the income statement in this case. One of the first costs of production you're going to examine are the COGS, the so-called COGS, cost of goods sold. And basically the COGS are really the cost of the input required to produce the ultimate product of the firm. So if you're looking at raw materials, if it's a clothing factory, it'll be cloth. If it's Starbucks, it'll be coffee, the water they use, whatever input is needed to produce the product or the service that they're providing. The cost of goods sold are usually variable costs. They change depending on the amount of production, on the level of output of the firm. And so this will tie into the second element of the rubric, which wants you to examine variable costs and fixed costs. You can really examine and develop the first and the second element in the rubric together because the COGS are the variable costs. So are those costs that will change depending on the level of output. And then you want to examine the operating expenses. So costs such rent, for example, or the cost of office supplies, anything that is fixed that does not depend on the level of output. So those costs cannot be, defrayed by increasing output because rent remains the same no matter what. So those fixed costs, the operating expenses, are also usually considered fixed costs. When you put together the variable costs and the fixed costs, this is when you will find out when the optimal level of output for the firm is. So you're going to first examine them to determine how they impact the profitability of the firm, and then you're going to examine the costs to determine how to explain how they determine the output decisions of the firm. So you're looking at two outcomes, the profitability and the output decisions of the firm. When you look at the income statements, That's what you have to look for. Where in your firm's income statement that you can find on the website of your firm, you will be able to on the income statements, you'll be able to analyze, to identify the fixed costs and what the variable costs are. And then when you find the COGS, the costs of goods sold, you'll know that those are the variable costs. As I said, you want to go back 5 years. Now, it would be too challenging to put all the numbers just in an essay format, so it is recommended that you use a table or a graph. And that you can have a combined table or graph. So you can have a table that combines the COGS and the operating expenses. And if you want to show trends, it's easy to show it in a table or a graph because you can show the increases or the decreases that have occurred throughout the years on the costs of production. When you examine those costs of productions, you want to see, for example, if the prices of the inputs have changed. When you're looking at Starbucks, has the price of coffee changed? I can tell you right off the bat that it has changed because there's been issues with the coffee manufacturing down in South America that has increased the cost of coffee. So you can also go see how that impacted the profitability. It might not have impacted Starbucks' profitability in the short term if Starbucks pre-purchased the coffee ahead of time, for example. The same thing if you're studying Southwest, one of the inputs is fuel. We know that airlines purchased the fuel a few years ahead of time. So maybe an increase in fuel will not impact the profitability of Southwest in the short term because they might have purchased already 2 or 3 years of fuels ahead of time. But it will impact it later if there's a change in the cost and in the price of fuel. So when there is a change in the price of a major input that is needed for that firm, then you know that there's going to be a change in the COGS, and then you can establish those trends. Once you have the trends of the costs of production, that is when you can determine how they impacted profitability. As I said, if the inputs were pre-purchased ahead of time at a set price, the profitability might have just been impacted in the long term, but not in the short term. And so you want to explain that, and that is sort of intuitive. It's not like you might find it in the relations attached to the income statements if you read them. But if you don't find specific information there, then you would be able to determine that intuitively, just looking at the trends of the costs of productions that you have identified. Once you have determined and explained the profitability of the firm, you can move on and you can apply the concept of variable and fixed costs to the data you've already researched. So you don't have to start a new research. Just use the costs of production and the tables and the trends that you've already found, and you can use the concept of variable and fixed costs to explain how those inform the output decisions. As I said, the fixed costs do not change. So an increase in production would defray them over a majority of inputs, decreasing the cost per item, while the variable costs are directly related to the quantity of output. That is why they're variable, and that's why they have a different impact on the output decision than the fixed costs. Make a clear distinction. Explain what the difference between what a fixed cost is and a variable cost is to introduce the topic, which will help you just develop your essay and your discourse a little better. In this part of the rubric, you might run into having to explain, how does a firm make the decisions? The decision is usually based on the marginal cost to produce a good. There is a point of production where the firm is not going to go beyond because you have a decreased marginal revenue in producing additional units. You will read about this in your textbooks if you haven't already. But once there starts being a decreased marginal revenue in producing additional goods, additional units, the firm will stop producing because it is not profitable anymore. And this is how you tie in output and profitability in this section. Once you've gone over the costs of production, you'll be able to examine the market that your firm is operating in. I think this is the most fun part of all the milestones, to be honest. I like examining the markets. There's going to be three aspects. First of all, you're going to examine the market share of the company. You might get lucky and you might find a table, a pie chart, a graph that already illustrates your market share for your company if you Google it. I have students who have found them already made for their company. You need to establish trends through the years, so it'll go over a 5-year period. If you do not find that information on Google or directly, you don't find an article that discusses it compared to the competition, then it's easy for you to identify your market share on your own. What you're going to get is you're going to get the total sales for that market, and then you're going to identify the sales of your firm, and you're going to identify the sales of the top firms in that market. And then you can split them in percentages. And that's how you determine your market share, because your market share is going to be a percentage. Make sure to include a chart, include it while you're doing the milestone, because that chart will make this section exemplary for the final. Yes, Laura, the Wall Street Journal website is a really useful resource. Forbes sometimes has charts too, and other times you might find, for example, that some universities have done some research. If you research, for example, Starbucks, if any of you is doing Starbucks, there's a paper developed by Harvard that does a complete analysis of Starbucks. And you'll be able to use a lot of that information. It's very useful to develop your Starbucks paper. For example, it might not have. It has some charts. It's got a lot of insight on costs of production, on the market, on the competition, on the barriers that Starbucks market faces. It's really, really useful. So moving on, once you've established the market share of your company, this is a really important part to do correctly, because that will help you then determine the market structure of your company. So once you've established the market share and you've explained the market share, you've analyzed it, you're going to move on and you're going to analyze the barriers to entry that the market for the market that your firm operates in. What are the barriers to entry? The barriers to entries are the barriers set that are the challenges that new firms might face if they want to try and enter the market. The most prominent barriers to entries are three: the economies of scale, the regulations and the policies, the government regulations, and the product differentiation. The economies of scale is basically the mass production. It's like the factory production. So the economies of scale are what makes it cheaper to produce each unit of your product. Matthew, for market shares, I'll answer your question, sorry, when we get to the end of this. This way I can answer everybody's question. Just hold on to that thought for a moment. So when we do the markets, when you're looking at the barriers to entry, focus on these three: economies of scale, regulation, and product differentiation. And then you might find additional information. For example, on the analysis of Starbucks, when they do their analysis of the barriers to entries, they look at the competition, at the concentration of the market, at the life cycle of the market. At what stage of the life cycle are we? And they consider the coffee market to be at a mature life cycle. The capital intensity. How much capital do you have to invest to start up in that market? How fast does the technology change? What regulations are in place? And you observe all these aspects to understand how hard it is to enter and penetrate that market. And the last thing is then determining the market structure. So we know the market share. So we know, for example, how many companies and firms are dominating the market. If you have about 6 to 8, 9 companies dominating the 80% of the market, then you can safely assume that you are in an oligopolistic market. If you have 2 firms dominating the market, you're going to have a duopoly, which is the closest thing to a monopoly. There's very few monopolies you will find, and there's not going to be a lot of perfect competition markets. Perfect competition markets are usually commodity markets, like wheat, for example. Those are more perfect competition, or the oil sold as a commodity, not at the gas pump. Those are considered more perfect competition. Otherwise, usually it's a monopolistic competition. That is the most common form of market. The difference between a perfect competition and a monopolistic competition is the product differentiation. For example, toilet paper. If you get toilet paper, that is a monopolistic competition. They all differentiate because they have 2-ply, 3-ply, softer, harder. They have aloe in it, or they try to bring their brand to the forefront. So brand differentiation is really what drives monopolistic competition. So once you have examined the market share, and you know if there's a dominant group of a small group of companies that dominate the market, and if you have established the barriers to entry, if it's a very difficult market to penetrate, then you know it's not going to be a perfect competition. Candace, autos could be an oligopoly too. Like if you're doing, for example, Tesla, there's very few electric cars that dominate the market. So you would have more of an oligopoly. If you're doing all the autos, I think it would still be an oligopoly because there's not that many brands that dominate the market. You would have to go see the market share. You're doing Ford, go see the market share, because I'm not sure, but if you have, say, 7 to 8 firms dominating 80, 90% of the market, controlling, and then there's just all other firms controlling just 20%, then that's an oligopoly. Yes, the airlines are an oligopoly. They're considered an oligopoly. Just because there's a lot of them, it doesn't mean it's going to be a perfect monopolistic competition, because you have to see how much the smaller companies control of the market. So you might have just a few companies that control 80%, and then you might have 100 companies that control the remaining 20%. They just have a very small share. So that's how you determine what an oligopoly looks like. The other way is using the concentration ratio that is on chapter 12 of your textbook. If you with the concentration ratio, you're literally quickly calculating it based on the market share. It's a very quick sort of calculation you can do, and you can include it in your essay to explain how you determine the market structure. Oh, Valencia, can the others hear me? Valencia can't hear me. I just want to make sure everybody else can. Yes? So I think it's your computer. Let me write to her. Because she can't hear me. Good. So once you have established, you've researched the cost of productions, and you've established the market share of your company, you've decided what sort of market it operates in, you're ready now. You have all the information you need to provide recommendations for your company. The first recommendation you're going to provide is what the future production of the company should be. So you are going to manage the future production, use the data you have collected through Milestone 1. Well, Milestone 1 didn't have data. In Milestone 2 and Milestone 3, use that data and use it to see where the firm is headed, and based on your demand and supply analysis, and to provide a future recommendation for future production for your firm. The second element will be based on your market research. the research of the market and the competition the firm is operating in. How is your firm impacting the competition? Does your firm even have any power or any sort of leverage within its market? And how can it use that leverage to improve its position on the market? No, beer is not a monopoly, Anna. Um, beer is beer might be an oligopoly, or it might even be a monopolistic competition based on the concentration ratio you might find when you go look at the market shares. So the second recommendation you're going to provide is on the market and how you're with its positioning within the market. How is your firm, what kind of impact your firm has on its market? And the third recommendation is moving forward. How can your firm become more successful? And in this case, the rubric requires you to examine the demand trends that you did in milestone 2 and the price, and discuss the price based on the price elasticity. What sort of pricing strategy is going to help your firm be more successful? Laura, you can do the HHI calculation or just calculate the concentration ratio. You can find both on chapter 12 of your book, and they usually bring you the same result. But I would do the calculation, the concentration calculation, just because that's the easiest way to determine the market structure of your firm. It's now, if you see that you have 3 or 4 firms dominating 80% of the market, there's nothing to calculate. That's an oligopoly. But if you're in doubt, you can just calculate it, and you can use the concentration ratio to justify your determination and your statement in your essay. That's what you can explain. So once you've provided all of your 3 recommendations, you're done with the milestone 3, and you have all the elements you need to do your final project, because all you will have to do is put the 3 milestones together and make it one essay. Don't forget to apply APA formatting to your essay. Don't forget to cite consistently your sources and to reference them. Every reference you list must correspond to a citation you have in your essay, because the reference is nothing other than the list of the sources you cited. So if you have 7 references, different references, there have to be at least different sources cited in your essay. And then you follow APA formatting for those. There's actually explanation on citations and APA formatting on this. There's resources available through the website, through the Brightspace, where you can go and through the Shapiro Library, you can have your citations and references generated for you, which is very helpful. And that just make sure, because you don't want to lose points for something you have complete control over. If you're in doubt, you can ask your instructor. Do we have any questions regarding milestone 3? Okay, Hannah's asking, when researching, what if I can't find information online? I couldn't find anything for price elasticity for Samuel Adams last week. Well, Hannah, you're not going to find a source that tells you if Samuel Adams is price elastic or not price elastic. That is something you have to determine yourself by looking at your demand trends and how the demand might have changed if there was a change in price for the firm. So it's something you might be able to gather from your income statements, from your firm's financial statements, or you might gather just by applying the determinants of price elasticity to your firm and answering those questions. But this is something that is where you get to study the theory and try to apply it to the real thing. That is, and where you can see if apply what you've learned. Oh, you have a great evening, Laura. B. Woodall wants to know, is a trade tariff considered a fixed or a variable expenses if it isn't a direct item of production? A trade tariff would be a variable expense if it's a tariff imposed on an input of production. So for example, if you're importing steel and there's a trade tariff imposed on it, it increases the price of steel. So it would be a variable cost. Oh, good night, Hannah. Does anybody else have questions regarding Milestone 3? Yes, Bill, thank you. That answers Hannah's question. To always look at the determinants of price elasticity. So if you have acceptable substitutes to beer, you already know that it's going to be more price elastic. Matthew, for market shares in automotive, is it better to show market share for all the autos and separately for electric vehicles? Same industry but different market segment. Are you studying Tesla by any chance? If you're doing the electric vehicles, you can focus on, yes, just focus on the electric vehicles. You don't have to necessarily show for everything. And I know, Matthew, if you look for it, there is a pie chart with the market share for Tesla and the other electric vehicles produced by the other firms. Yes, focus on the product that your firm produces because it is not in competition. I mean, there is some competition with non-electric, but the main competitors are the electric vehicles, obviously. Did we miss a question? Yes, the webinar is recorded and can be found in the SNU Echo channel. Thank you, Kimberly. With Starbucks, you would probably focus on the sale of coffee, although Starbucks is expanding, and to offer some breakfast items and some lunch items, but their main offering is the coffee. So their competition is usually other places that offer coffee. Well, if you're studying Candace, if you're studying Ford, yeah, you would do the other automotive firms in general. Is there anyone working on Starbucks? Valencia, go look at the Starbucks corporate analysis. I think it's called Starbucks Corporate Analysis by Harvard, and you will find a wealth of information that you can use for your essay. Just make sure you cite it in reference it correctly. PepsiCo has many products. Well, Kimberly, what do you want to focus on? You can focus on the drinks, for example, and the competition with Coca-Cola and whatever other firm is there, or you can focus on the snacks. I would just focus on one line of products because you get lost. Oh, Netflix. Netflix is a good one to research. And the competition, you just compare it to Amazon Prime and Hulu. You can make some competition with the cable companies. Valencia, you would focus on the coffee for Starbucks. I would focus on the coffee. That is what Starbucks was started for coffee. It's known for its coffee. Everybody waits for the pumpkin spiced coffee, so I would focus on the coffee. Christina, you're welcome. So yeah, Starbucks is definitely the coffee, even though they're expanding. But so Valencia, when you in your recommendations, you would use the keep in mind that they're expanding their line of offerings to be more competitive, and so that might be something you include in your recommendations. You keep in mind when you're providing recommendations. So we can close the microeconomic section and start the macroeconomic section, Echo 202. I think we're good with the questions. And I'll start opening up Echo 202. You are so welcome. Echo 202. Let's see if I open the correct document. Nothing is opening. Okay, let me try again. There we go. Hello, everybody. We're going to start the macroeconomic section, and we're going to go over the requirements of Milestone 3, the monetary policies. My name is Kiara Yates. I'm sitting in for this webinar. Nicole Soto holds the account, but she's not doing the webinars anymore. So Milestone 3 is pretty streamlined because it's very similar to Milestone 2. I know you might not have all received feedback from Milestone 2 yet because they are submitted back to back. If you have received feedback for Milestone 2, then you already know what changes and what improvements you can make in Milestone 3, but the format is the same. You're going to develop at least three slides. One slide is going to be the first one, and you're going to focus on the monetary policies that were used in the past, before your decade started. They were enacted before your decade started, and that carried over their effects into your decade. What policy? You always focus on the policy tools that the Federal Reserve uses to identify the monetary policies you're looking for, which are going to be the reserve requirements, the discount rate or interest rate, the changes in interest rate, and the open market operations. Those are the policy tools that the Federal Reserve uses, and if it's not one of these policy tools, it's not going to be considered a monetary policy. So for example, if you have an act that has changed bank regulation, that is not considered a monetary policy. You might want to mention it if you think it's relevant, but that is not a monetary policy, and it wouldn't belong in this section in this milestone. So it has to be enacted by the Federal Reserve, and it has to be one of the policy tools. If you look at this document that this presentation, this sample presentation that you also have in your classroom, you see all the blue areas that are highlighted are videos or additional resources you can use to help you develop your milestone. So the first slide will be focusing on the years leading up to your decade. If your decade is 2000 to 2010, you're not going to include in the first slide the policies enacted in the year 2000, because that's already in your decade. You're going to find the policies enacted maybe in the 90s or even in the 80s if you think that they carried their impact all the way to the year 2000. And you're going to explain how they impacted the beginning of your decade. Remember, you use the slides just for the main and core concepts, and you will be developing your content in the speaker notes. You cannot see the speaker notes in this presentations, but they're the area below the slide, and that is where most of your content will be developed in a sort of essay format, because you're going to use the slide only to highlight the core concepts that you're discussing. This is really important. If you do not develop speaker notes, we cannot give you more than a needs improvement because it's one of the requirements in the rubric. A very useful website is the Federal Reserve History website to use, because they go over the monetary policy history from the 40s on. You can find a lot of useful information. There is a great resource, especially if you're studying the 70s, that explains the whole high inflation, high unemployment, the stagflation phenomenon from the mid-60s all the way to the 80s. And so it gives you a whole picture of how it started, how it developed, and how it ended. And it can be just really useful for this milestone. Moving on to the second slide, or the second element of the rubric that you need to develop. And it doesn't have to be one slide. You can do more than one slide if you have more to say. Some students will use a slide per policy they find. Other students will just list a couple policies in the same slide and develop everything in the speaker notes. That's a personal choice. There's some students that like putting visual aids and pictures and images in their slides just to make them look more creative and more appealing. It is up to you what you use. But in the second element of the Milestone 3, you will be researching the monetary policies that were enacted during your decade. So from the first year that you have chosen your decade, if it's the 90s, 1990, if you start in the middle of the decade, 1995. So you will be identifying the monetary policies enacted throughout your decade. There are some decades that might be more challenging than others when it comes to monetary policies, because they might not be some very obvious or glamorous monetary policies, but a simple change in interest rate year to year or every couple of years or several times a year, that is a monetary policy. So don't let that deceive you. I have a lot of students that come and write that the 60s were poor monetary policies. Well, if there was a change in interest rate every year, those are monetary policies, and those are to be included in this section, and you can examine and you can explain what impact those changes in interest rate had, for example. So don't, just because you don't find a big obvious monetary policy or something major that the Federal Reserve did, it doesn't mean that they didn't do it. Rarely will you find changes in reserve requirements. They used to be more common in the earlier years of the Federal Reserve, but these days, it's not used so much as a tool. Karen, I'll answer your question in a minute. Let me go through this, and then we can do all the questions. Again, for monetary policies, make sure you develop the whole decade. You don't just want to develop, say, the first half of your decade or just the second half of your decade, because you want to provide a 360 degrees picture of your decade. So you want to examine what happened at the beginning, in the middle, and throughout to the end. And explain what the intent of those monetary policies were. I mean, why did the Federal Reserve, for example, increase the money supply? Or why did it decrease the money supply? Why did it increase or decrease interest rates? You want to explain the intent. So in this slide, you will not going to explain the outcome, the actual outcome of the monetary policy, but you will explain the intent. What was the purpose of implementing that monetary policy? Why did they do it? And then when you go to the third element, that is where you will be able to explain what the outcome of that monetary policy was. Is the outcome what they were expecting it to have? Was it better? Was it worse? Did it not work? And for the 70s, the monetary policies were not effective in curbing inflation. So we can assume that they were not very successful. So much so that at the end of the 70s and beginning of the 80s, there was a change in monetary policy trend or to try and curb inflation and bring it under control while reducing unemployment. So when we get to the third element, that is where you're going to explain the impact of the monetary policies. When you explain the impact of the monetary policies, you can use some of the elements that some of the data that you have researched in Milestone 1. Because you have researched inflation, unemployment levels, GDP levels. So you can use that data to illustrate the impact of the monetary policies. You don't have to do additional research. Go look at what you had in Milestone 1, use that same data in this element to start explaining the impact. And when you explain the impact, you can explain if the original intent was reached. It might not have been reached, if it worked better than they expected or not. And you also want to explain how the monetary policies impacted households and businesses. This is a requirement of the rubric, so you don't want to miss this part. If there was, for example, a change in corporate taxes, how did that affect businesses? Did it encourage them to invest more? Did it discourage investments? So that is something you want to look at. As I said, you're going to have some challenges for some decades just because some decades are better known for monetary policies and others are better known for their fiscal policies. But every decade has relevant monetary policies that you will be able to use. If you're studying the 1950s, you might have a little bit of challenge identifying the policies from the past because in the 40s, the Federal Reserve interacted a little bit differently with the Treasury. You will find the Treasury Accord, which is, so maybe you can use that to explain what the past policies that had an impact on the 50s. Once you've reached your the last slide of the monetary policies, you can stop. Milestone 3 is ended. All you have to do is make sure you include a references list and make sure you cite all those references in your speaker notes or in your slides, depending on where you're using that information. Again, I cannot stress enough, use the slides for main concepts, core concepts, visual aids, tables, charts, and develop that content in the speaker notes. And when I'm talking of developing the content in the speaker notes, a 1.5 line sentence does not mean that you develop that content, that it would not be sufficient to get out of the needs improvement area for that element. When you will have to have a couple of sentences that explain the impact of the monetary policies, a couple of sentences that explain the monetary policies that were enacted and what their intent was. One sentence, brief, one sentence of 1 or 2 lines is not going to be enough. It means that you wrote everything in the slide and you didn't really develop the speaker notes effectively. That's about all. Monetary policies was pretty streamlined, as I said. I don't know if you've received feedback for your fiscal policies for Milestone 2 yet. I know I haven't finished providing feedback to my students, and but if you have, then you would know what you need to do to improve on Milestone 3, and you might even have questions about it. So we can move on to the questions. Karen is asking, any advice on finding material on the federal website? I've been looking and found meeting summaries, but it's like going down a rabbit hole. Karen, go on the Federal Reserve History website. And when you go on that website, you will find more article format sort of information that goes over the Federal Reserve decisions and the monetary policy trends for the various decades. So that might be an easier read and might provide you more information on what you're looking for. Jonathan, so I'm working on the 70s. I've reviewed many articles and I'm not sure where to start. I understand we start with the prior decade, the 60s, which included the war and Johnson's social programs. Yes, Jonathan, Johnson's social programs, though, were a fiscal policy, so they would be suitable to be used in Milestone 2 as an introduction to the 70s. You need to identify the monetary policies from the 60s that would have impacted the 70s. And the monetary policies of the 60s was that they didn't really focus a lot on monetary policies. There was a lot of optimism during the 60s, and they sort of and that is what started causing a rise in inflation with the addition of the extensive spending of the social programs, and that then led into the 70s that were also affected by the oil shortage that just exacerbated everything, the whole situation. Bill, I don't know if you have ideas on articles regarding monetary policies of the 60s. But Jonathan, if you go on the Federal Reserve History website, there is a really great article that outlines the monetary policies all the way from the 60s to the 80s to explain the hyperinflation. Let me see if I can find it. But it's a really informative website that will give you a very comprehensive view of it. So this is one for whoever's studying the 50s that goes all the way through into the 60s. But this is the website to go to, federalreservehistory.org, essays, and you can just research. This specific link I'm putting in here goes from the Treasury Accord of the late 40s to the mid 1960s. But so Karen, you can also use this website, federalreservehistory.org. And there you can really find essays that explain well the monetary policy trends throughout the decades and how they link into each other too. You're welcome, Jonathan. Vanessa, you're welcome. Even for the fiscal policies, I mean, you might have tons of fiscal policies through a decade. We're not expected to analyze and explain all of them. You just want to focus on the major fiscal policies, the one that might have had a greater impact or are more prominent, and just focus on a few of them. Just focus on a few of them that cover the whole decade, though. Don't just focus on one monetary policy that covers the first half of your decade and then forget the second half of your decade. That's all that I tell you. Try to find the monetary policies and the fiscal policies that more or less cover your whole decade. As I said, if you're studying the 60s, it'll be a little bit more challenging. You're pretty much just looking at the changes in interest rates that occurred throughout the decade and how they might have affected inflation or unemployment. And you can see that as the decade progressed, maybe they weren't very effective in keeping inflation low. Because what happened in the 50s, there was a very obsessive control of inflation and trying to keep it low. And so once they stepped into the 60s, they tried to shed away that inflexibility, of that the control of inflation, and they let it run a little more, and that's what then led into the 70s with the hyperinflation. You're welcome, Karen. Does anybody else have questions about monetary policies or how to develop the slides? Does everybody have clear how to include speaker notes in your slides? I see someone is typing. Karen, I'm glad you got it. Mary, glad. As I said, the speaker notes are a really important part of developing the slides. No speaker notes, no proficiency on the slides. I can assure you that. You really need to develop them. The slides are not enough space. There's not enough room in the slides to include all the explanation or the analysis you need. Because, you need to analyze what you find, the information you find, and explain it. So Jonathan is asking, so in the 60s, the goal was to keep unemployment before 4%, correct? Jonathan, is that what you found? That was the goal? I'm not proficient on all the decades to tell you if that was the goal specifically for the 60s, but if that's an information you found from a reputable source, then that would be correct. Yes. The 1960s had, as I said, in terms of monetary policies, they weren't quite as worried about them as they were, say, in the 1950s, where they tried to keep spending low and control over inflation. When you get into the 60s, as you can see, you have the space race, so there's lots of spending. You have the social programs. There's a lot of optimism, first man on the moon, and I don't think they were really keeping a very close eye on inflation. Yes, Karen and Woodstock. It's just a very particular era, the 1960s. It is really interesting to study. I understand there is a slide. Yeah, Amanda's asking, I understand that there is a slide for monetary from the decade before, and then we do the monetary policies for our decade. Can we integrate the monetary policy and the impact, or is it imperative that they have their own slides? So I would have two separate slides for the monetary policies from the decade before and the monetary policies for your decade, unless you have a monetary policies like, for example, in 1979 when they changed the monetary policy focus into the 80s. So that kind of applies to both slides in a way, because it started in 79, but that starting in 79 didn't really impact the beginning of the 1980s, although it was in the previous decade, strictly speaking. So that you might be able to integrate. I would keep them a little separate, because the purpose of explaining the policies from the previous decade is to frame your decade, is to explain why did the 1970s start with a high level of inflation, or a hiking level of, why did the 1980s start with a high level of inflation? And so you are examining the policies from the previous decade to explain the economic conditions at the first year of your decade. So it would kind of make it difficult to explain if you blend it all together. Now, when you're explaining the actual policies and their intent, you want to make sure that you distinguish when you're explaining the monetary policies you find and the intent they had compared to the impact of the monetary policies, because they're two different things. The intent of the policy is not necessarily the impact that the policy had on the economy after. So yes, you can blend, like you can integrate, Amanda, but you just need to be careful not to blur the lines, because you might miss out on some of the requirements of the rubric. Vanessa's asking if for the 60 we should research interest rates. I would. I'm not aware of any other prominent policy in the 1960s. And Bill, I don't know if you want to intervene. You might know more about the 60s than I do. Jonathan, the 70s were a mess, but I think when it comes to, it's one of the most fun ones to research, because the 70s had the stagflation, which never existed before, and there was a lot of work to be done. So it's a mess, but you can focus on a few key aspects of the 70s. Don't get lost into everything. There's a lot of events to discuss, so it's kind of fun. And I think it's nice to look at the policies from the past and carry them over into your decade and understand how everything makes sense and is linked together. So, the policies from the 60s really impacted the 80s, if you think about it, because that stagflation carried out all the way into the 80s. So it's really interesting to see how that happened. Yeah, blame Keynes. Karen, that's funny. I just find it really interesting to see how you will find out how the decades are linked together, both for fiscal and monetary policies. I mean, there's some economists that blame the severity of our recession to the policies enacted in the 1980s, and there's some economists that completely disagree. But there might be some truth to it, because the truth is always in the middle. So it's just fun to, I guess, to see how policies carry their effects for quite some time, even though we don't realize that. Amanda, you're welcome. Are there any more questions? Yes, it is an interesting research. Nixon resignation. You can't say that it's an impact to fiscal or monetary, because Nixon resignation, it can have an impact on the economy. So that would be more part of milestone 1, when you identified relevant historic or current events that impacted the economy, that could have had an impact on the GDP or on employment or inflation. If you think that his resignation had an impact on the economy as a whole, because maybe, there's events that have an impact on the economy because they deflate consumer confidence. If consumers are not confident, they're not going to spend money. Karen, there is a trade policy in the final project. It's just not developed in Milestone 3. So in 2 weeks, when we go over the final project requirements, we're going to go over the trade policy slides, and the conclusions you will have to include in your final. You actually have to add at least 4 slides. The trade policies will be import exports, and then the events that impacted the trade policies, like even international events. So that's something that is not included in Milestone 3. You won't have to worry about it now. And trade policies are not fiscal nor monetary policies. The only way the trade policy can fall within the fiscal policy category if it's a trade policy that requires an increase in government spending or an increase in domestic taxation. Yeah, set the trade policies aside, and we'll get to them in 2 weeks. I hope to see you plenty here. Anybody else has questions? If you have questions on the formatting of the slides, are you having difficulty converting the slide into a PDF, the PowerPoints into PDF to post them? If you convert them into PDF, you will have a more accurate originality report. And when you know your originality report, if you see that you have the originality report has a high percentage, that gives you an opportunity to go rewrite the sections that match too closely and resubmit for a lower percentage of non-originality, which helps your final grade on that. Great. I'm glad you're not having issues with saving as PDF. It can be a little tricky depending if you have a Mac or you have a PC. It's a little easier on the PC to include the notes when saving it in PDF because it's a little bit more intuitive. But if you have a Mac and you're saving it as PDF, there is a little drop down list where you can select notes. And in your print preview, it will show the notes all of a sudden, and then you can save it as a PDF. Should we include graphics of the Phillips curve? Jen, if it helps you explain the stagflations of the 70s, and how originally they believed that there could not be high unemployment and high inflation, but now there is, you can use it. I mean, you don't have to limit your elements to one slide. You can have one slide where you explain the phenomenon of stagflation and then another slide where you explain the policies, if that helps you with your flow of thought. One of your graphs is not visible when I convert to PDF. Amanda, I know that is a problem that has been encountered in the past, and I'll be honest, I don't know why. My recommendation would be that you then post both the PDF and the PowerPoint, and maybe write a note to your instructor explaining that the graph is not visible, so to go look at it in the PowerPoint. Because then we can see the preview of the PowerPoint, just the slides. We just can't see the speaker notes. So he wouldn't have to download or open the PowerPoint. They would just have to go look at the preview to look at that graph. Yeah, you can just copy the image and repaste it. It's where do you see the originality check? Usually where you have posted your assignment, next to it there'll be a little box that shows a percentage once the originality check has processed. And that percentage is your percentage of originality. So if you have, I like seeing about 20-25% or below, but sometimes the references come as non-original, and so maybe 30-35% is also acceptable, just because the references are what are increasing the non-originality. So Amanda, that's not working. I wonder if you could Google it, and someone else who had the same problem might have been able to resolve it. Sometimes there might be someone who was able to troubleshoot it. Because I don't know why the graph doesn't appear. It might be the type of graph you pasted into your PowerPoint, and somehow it doesn't recognize it. But So you have to see what the difference between that one graph that you pasted as compared to the other two in your PowerPoint. It might be in a different format, and that's why the PDF is not recognizing it. I would Google it because you might find the answer right there. Does anybody else have questions regarding Milestone 3? If there's no more questions, I'm going to wrap it up for this evening. Great, Mary, thank you. And I hope to see you back in 2 weeks to go over the final project. We will go over the trade policies and the requirements of the conclusions, which often are underestimated. You are welcome, Adrian. Good night, Karen. Oh, you're welcome, ma'am. And if you have any questions that come up later, really ask your instructor. There will be a recording of this meeting posted on YouTube before midnight. If everything goes smoothly, it's on the SNU Echo channel. So you'll be able to watch it over again. You'll be able to read the questions that the other students made. You can go look at the other webinars from the previous semesters and see if you can gather additional information. Especially sometimes you can gather additional information about your decades. Someone shared a link or a source. Good night, Vanessa. Good night, Jonathan. Yes, I think you might be making it harder. It is not uncommon. You're not alone, Jonathan. Just find, identify a few